allow me to welcome the speaker of the day. The speaker of today is Mr. Kenon Mwiti Mbai, who is a seasoned finance professional with over 20 years experience in different fields, ICT, hospitality, and finance services. Mr. Peter Mbai is an MBA graduate and also a CEO at Mwalimu Biashara. Mr. Peter Mbai, if you are ready, take it up from there.
All right. So, ladies and gentlemen, we are elated to welcome you today to the webinar that we are taking around matters taxes. We are here joined by my colleague, Alice, and my other colleague, Agnes. We are a company called Mwalimu Biashara. We are a finance company. What we do, we help people make more money, grow their money, and protect their money. So today, it's our pleasure to take Kenya Pharmaceutical Association through this tax webinar. Tax is a very wide subject. We imagine that we cannot sort it out in the time that we have. So we welcome you to put in the questions on the chat section. The agreement we have with Calvin is should anything overflow even beyond the time that you've been given, we will make time to respond to your queries even outside of this webinar. So here we are, ladies and gentlemen, we are happy to welcome you. I'll go ahead and project my slides so that then we can start off on the webinar. Give me a minute for me to project and for us to be able to be together. Give me a second. All right, I'm checking on my monitor side. I see, yes, we are on to look at matters tax. The topic of the day is what are the tax implications of the recently enacted Finance Act, and what are the other areas that a pharmacy practice should be thinking through on the subject of taxes. These are the 4 areas that form our agenda item today. We'll start by looking at the taxes that affect micro, small, and medium enterprises in general. I'm not sure how Calvin will guide me about Philip, who's raised his hand.
Just continue, Mr. Kenon. I think that's an error. Okay. Just continue.
Okay. Then the second thing, we'll be talking about the impact of the recently enacted Finance Act. As you all might be aware, that law was signed by the president. Ideally, it should be law, but we know there's another process that's happening that the courts have actually put it on hold. So even as we make this presentation, we are alive to that fact, but then we choose to give you the information as we've compiled it in the current situation as it is assigned by the president. Should there be any changes, then they'll be advised, the public will be advised through the normal means. But for now, we are educating you in terms of the taxes as they are as law. Tax compliance measures for your business. We have listened and tried to imagine what a pharmaceutical practice goes through when they're thinking about taxes, and you'll guide us a lot with your questions there. I'm an accountant, Alice and Alice are also accountants, but we've made every effort to understand the pharmaceutical business. We beg your indulgence there. Should you feel there's something we need to do differently, please put it in the chat. Then lastly, when KRA engages you, what is the best approach to engage KRA as a business? These are the 4 items that we're going to be looking at today. Talking about the taxes that affect anybody actually, and when I say MSMEC, it also covers individuals. Taxes are divided into 2. Basically, direct taxes and indirect taxes. Direct taxes means for every shilling you earn as income, you pay a proportion of that as tax. So it is a direct tax in that you earn 100 and the tax rate is 30, so you pay 30. If you earn another 100, you pay 30, so they are proportional. Indirect taxes, after you've paid the direct taxes, the money that you take home, then you end up paying more taxes using that money. That money is called disposable income, and those are the taxes that are there. So we'll be talking about pay as you earn, corporate income tax, withholding tax, digital services tax. For the indirect taxes, we'll just touch on VAT, excise duty, and custom duty. So we have a table here that just basically summarizes these taxes. What we've done, we've taken the very main taxes that would be affecting a business. Pay as you earn is payable by anybody. Basically, there's a graduated scale on that. The tax law has given us the rates at which every income is taxed. And graduated means it starts from a low rate. In fact, it starts from 0. It builds up all the way to now we even have 35% in the current law, basically by individuals. How do you know when to pay it? By the 9th of the following month, that tax needs to be paid. And this is done through the iTax. It's important to note, should you have 0 PYE, then please file a nil return. What does that mean? Go into the tax iTax and indicate that my income is 0, therefore my tax is 0. You need to actually make that filing. Otherwise, then it will be deemed that you've not complied with that tax. Installment tax is payable by businesses. And we can say this is like an advanced corporate tax. How does it work? A business, and I know maybe I have a slide talking about the various forms of business, whether it's a sole proprietorship or a partnership or a company. So I'll come to that. But for now, this installment tax and corporate income tax affects corporates, companies limited. So then how does it work? Ordinarily, companies run their affairs and they close their books at the end of their financial year. At the end of the financial year, it's determined whether they've made a profit or a loss. Based on that, then you pay your taxes. However, if you're a business that's already running, there's a law around installment tax. And how it works, you're not meant to wait the end of the year to determine the taxes you need to pay. Every quarter, you make an estimate of the taxes you think you're going to pay as a business, and you make that payment by the 20th of the following month after the quarter. How do you make the estimate? You can take the tax you paid the previous year and increase it by 10%. If last year you paid 1 million shillings in taxes, this year, as you estimate, you take 10% of 1 million, which is 100,000, add to the 1 million that you paid. Now you have 1.1 million. Now you assume your business is going to pay taxes of 1.1 million. That is a prior year basis. If you're a new business, you can make an estimate. The thing to say here is that it's very punitive to you as a business if you are so way off on your estimates, because there's nothing wrong. You can decide to ignore the prior basis and use the current year basis. It's okay, but the risk is high. Okay, because if you're so way off, then the penalties that you attract are high on you. Our recommendation is, as a business, it's best to use prior year basis. In any case, at the end of the year, you make the adjustments that are necessary. Then comes corporate income tax. This is now the installment taxes put together, plus the final quarter, what you're going to pay. That entire tax is called corporate income tax. It's just that, as I say on my remarks there, installment tax is like advanced corporate tax. That is paid at the rate of 30% for resident companies and 37.5% of non-resident companies. By the end of the year, when the year is over, you're meant to finish your accounts in good time, get audited financials, which have actually have the right tax computations done, because accounting profit is different from tax profit. But basically, as a layman, is to understand that you need a technical person to compute for you the taxes. After you compute, then you pay by the 30th of April the following year. The next tax is turnover tax. This has been in the news quite a bit because there have been changes on it. The idea is businesses that are considered small then have an avenue of using turnover tax instead of using corporate income tax. And how does that work? As long as your business turnover, the sales that you make, are below 25 million every year, and of course above $1 million, that is the bracket. If you're in that bracket, you have the avenue to consider turnover tax instead of corporate tax. Good thing is that the turnover tax is a final tax. You don't need to do any more computations. And how it works, just get your sales, get 3% of the sales, and pay that as your tax. That is final. By the 20th of the following month, you pay that. It's worth noting that although we have a slide that talks about the impact of finance bill or the finance law as it is right today, initially this rate was 1%, but we'll share that in a short while. Withholding tax is important to be aware. If you pay consultants, people come to give you management professional training, or others that are there, rent, royalties, dividends, and the list that I've put there, it is your responsibility to collect tax beforehand for the government. That method of collecting tax as you pay the person is called withholding tax. I will give you an example. A consultant walks to your office, they do work for you, and they charge you 100,000 shillings. Ideally, when they give you their invoice reading 100,000, you are meant to withhold a percentage. The most common one is 5% for resident, but there are others like architects who have a different percentage, and your tax expert can help you. The purpose of this conversation is just to show you generally how it works. You don't pay them the entire 100 shillings. You actually pay them 5% less, which is 95. These 5 shillings that you haven't paid them is called withholding tax, and it is your responsibility to make sure that you surrender it to the government. Now the current law says 5 working days after you've paid that supplier. Initially it was different because people used to wait and pay or by the 20th day of the following month. So, and the other thing is you will need to do that through the iTax system, because then it records a withholding tax certificate in favor of the person who you have not paid 5%. To complete that loop, that professional, when they are filing their returns, it means they have already paid an advance tax of 5%. They will go ahead and file their returns and do their own math. But at least at that point, the government is very well aware that there is a tax that is supposed to be paid. This law is supposed to help. Initially, consultants would actually go scot-free without paying taxes. But then at this point, it's clear that they are able to pay taxes. Now, the other taxes, these are the main ones that affect the business. Of course, the indirect taxes like VAT, what's important is to see, and I have a slide showing you that pharmaceutical business being a stock-based business, its inventory, it's important to have your inventories with the right code of VAT, but that goes into how your systems have been set up. So ladies and gentlemen, I think that's what you've done about the tax obligations, just to give you a basic layout of the taxes and how they work. The second agenda for today then is we have the Finance Act 2023. What we've done with our presentation, we have highlighted the impact. Okay, what does it mean for you and me as Kenyans? Because in this call, you are here in the capacity maybe as an owner of a business, so it's going to affect you in your business, but you also could be here in your capacity as an employee. Then also we've highlighted the impact of that. So the 1.5 housing contribution actually now is a tax. What it means is that For every 100,000 an employee was taking home, then they'll pay 1,500. And that's the same effect for a business. For every 100,000 of profits, then you're now going to pay a new 1,500, which you were initially not paying. This is now a tax. It is gone to the consolidated fund, and there are no refunds to that. Second change is the PAYE brackets have been changed. For a long time, we've always known PAYE, the highest bracket is 30%, but that has actually changed, because for people who are earning over 500,000 shillings a month as an employee, but below 800,000, so you're earning 500, 600, 700, or something in between there, you have a new tax band. The additional tax that you're going to be paying as an employee because of this is that for every 100,000, then you're paying an extra 3,250, which you initially not paying. There is no effect on the business because this is taxed on the employee. Again, in the same way, people who are earning above 800,000 shillings, then there's a new bracket, 35%. After paying the new 32.5%, and you still are earning more than 800,000, then it means for every extra 100,000 you earn, then you are paying an extra tax of 5,000 shillings. All right, I've talked about the turnover tax and said it has moved from 1% to 3%. So if you're an employee, there's no impact on you. But if you're a business that is between the margin that we say, the million shillings and 25 million, for every extra 1 million shillings of revenue, sorry, now this is revenue, of every revenue that you make, then you're parting with 20,000 shillings. Because the additional thing is from 1% to 3%, right? So again, the change of the bands on the turnover tax, it would mean that initially, that band was initially 1 million to 50 million. Sorry, I think I said 25, it's 15. Now currently is 1 million to 15 million. What does that mean? For an employee, no impact, but a business, there is an impact. Because initially, businesses that were had a revenue of more than 15 million, up to 50 million, had the luxury of using turnover tax. Turnover tax is less, it has less administrative burden of compliance. But now, unfortunately, you've been moved to a higher band. You will need to comply with taxes like the higher mainstream tax regimes. That is the impact that has on you. There's a common one, increase in VAT on petroleum products. We know that it was initially 8%, now it is 16%. We have taken that practically what it means. It means if you're going to fuel 1,000 shillings today, then you're going to get less fuel. 0.38 liters less than you would have gotten if when the VAT was 8%. That's affecting both employees and businesses in the same way. We all fuel in the same fuel stations. The reason you've taken this approach, we don't know the CC of your car, we don't know how often you drive, we don't know how far you drive, so it was best to look at it in terms of the number of liters that you're going to be losing, so to speak. 5% withholding tax on income earned by digital content creators. It's affecting okay, we take this, this could be your business or not. I think it might affect both, but the idea is that for every 100,000 that you're going to earn, now you're going to pay a new tax of 5%. Export levy from 15% to 17%. Again, no impact on the employees, because most of the time this would be run by businesses, yeah? And in that case, for every 1 million exported, then you suffer 20,000. Disputed taxes. And I'll have a slide talking about how to deal with KRA. When you dispute your taxes, there's a process that might end up in the Tax Appeals Tribunal. I'll be showing you that in a short while. But should you get yourself there, you will need to deposit money, whether you are right or wrong, whether you're going to win or not going to win. That has an effect on both employees and the business, because any person can go to the tribunal or has a right to follow up their taxes up to the tribunal level. The challenge here, it may not be first of all, it's monetary, because it's money. We don't know the size of the dispute of the tax. But first of all, if the tax is 1 million shillings, 20% of that, we are talking about 200,000. However, there's a bigger issue: obstacle to access to justice. What if you are right and KRA were wrong? What happens? So that's what we see as the impact over and above the matters that concern money. We've just talked about remitting withholding tax by agents. It has been moved from 30 days to 5 days. What that means for a business, because this does not affect employee, is the extra cost of compliance. How does that look like? You're in a business that is actively withholding tax. Initially, you would keep withholding tax for the whole month, say the month of June. You finish that process, then you had 20 days in the month of July to prepare the figures and do your accounts, close your books, make your returns, and then pay. That process can easily be done by one accountant. Now the new law says every 5 days, if I sell on 1st, whereas the last time I would have waited to 20th the following month, it means by 6th of the same month, I need to have gone through that process, completed and filed and paid. What does that mean? You are doing that on a daily basis, because what you invoiced on 1st, 5 days later is on 6th. What you invoice on 2nd, 5 days later is 7th. What you invoice on 3rd, 5 days later is 8th. It would mean you are doing this process daily. So as a business, the impact we are seeing there is extra cost of compliance. We are seeing people having to hire accountants or bookkeepers to keep up with that process, and that is definitely a negative impact. Good news, it is not all doom. There are actually some positive things around this finance bill, finance act. So to be fair, it's good to put that perspective on both. The first one is the exemption of exported services from VAT. So whereas you're paying VAT on exported services, here there are some exported services that are exempted. What does that mean? We are going to export 100,000, you save 16,000. Before, you would have paid that 16,000, but now it's a saving. Proposal to reduce income tax rate on monthly rental income from 10% to 7.5 is no longer a proposal, it's a law. So if you have rental property and you're supposed to pay tax, initially you're paying 10%. Now you're going to be paying 7.5%. We put that as an effect on the business. It's okay, an employee can own a rental property, no problem. But when filing, they will need to file as if it is rental income. That's why we put the effect on the business, that for every 100,000 of rent you collect, then you're saving yourself 2,500 shillings. There is good news about an amnesty on penalties and interest. Ideally, if you're late to pay taxes for any reason, they will attract a penalty. If you don't pay that penalty and that principal, that penalty and principal attracts interest. So ideally, it's a very painful process. What an amnesty is doing here is telling you, bring yourself out, go pay the principal tax. After you pay the principal tax, apply for an exemption on penalties and interest. That is a good thing that has come in. It's 100% waiver on penalties on interest. Obviously, terms and conditions apply there, but should you meet all those terms and conditions, then we have a leeway of people getting waiver on penalties and interest. And as I say, and I'll say in the next few slides, it gives you an opportunity to get to the mainstream tax payment. And I'll be trying to convince everybody in this call, it is better to just comply with taxes and move on as it were. Refund of overpaid taxes. The bill now allows you to offset overpaid taxes with future taxes. Currently, this is not allowed, and taxpayer who overpays is expected to apply for a refund. So the way it works here, if you owe KRA something and they also owe you, you owe them, they owe you. In a normal circumstance, if it was you and me, would probably want to net off. Let's just net off and move on and get to know who owes the other net, and you pay the net. It didn't work like that. So in KRA, if they owe you on one hand, you're meant to pay whatever you owe them. But now there's a reprieve. There's a proposal that you can offset overpaid taxes with future liabilities, both as an employee as an employer. But remember, all these exemptions and all these refunds, they have other terms and conditions that you need to understand if you apply properly before you can go ahead and enjoy that. Processing refunds has reduced from 2 years to 6 months. So of course, the advantage there is that you get your money faster from KRA. Let me pause here and say this. This webinar is meant to explain to us matters from a finance perspective, because this can be challenged. Will it work? Will it not work? Respectfully, that is a discussion for another webinar or another subject, because as it was today, we say that the movement of money from the taxpayer to the government, that is finance. And that one we teach, that one we train, that one we are good at. How that money is used after that is a subject of politics. There's a lot of political angle towards how that money is used. Of course, the finance also plays a role, but it is the laws of the land, and a lot goes into that. That's why we desist from going into whether this is going to work. We are talking about it being what is on paper. Lastly, if you have a dispute with anybody, by the way, the best thing to do is don't rush to the courts. That's expensive. That is the last resort. Start with alternative dispute resolution. So now what has happened is the timelines allowed for you to negotiate and settle disputes around the ADR framework has been increased. Initially, you had only 90 days. If you don't agree, then the matter escalates. Now you've been given more time, 120 days, up from 90 days. That is a positive thing that has happened. These are the main positive impacts that have happened on the finance bill. I have the last slide here that talks about you need to understand the form of your business organization, because anything around taxes revolves around how you are registered. Now, this table here summarizes the kind of organization you are, the key features, the liability, but most importantly, what are the tax implications if you're a sole proprietor? It means you are running your business as yourself. You're a pharmaceutical entity that's running as an individual. You're not registered as anybody. You walk in as Canon. In that case, you have the basic form of organization. Your PIN number is the one that is used to file the returns of that business. You also could be a pharmaceutical organization that's a partnership. So you're running it as a partnership. The idea is that you've agreed your profit and loss. You have a partnership deed that's guiding you. It's important to know, again, the PINs of the owners are the ones that file taxes. At the end of the period, you decide your share of profit or the share of losses, and you file taxes using your own PIN number. Limited liability partnership. Limited liability partnership, again, it's run by partners. The partners must not be neutral persons, but they also agree on the share of profit. The liability is different. Whereas the sole proprietorship and partnership, the liability is unlimited. Here, it is limited to the partner's extent of their contribution, and at least one partner must be limited. Why do people do this? Is to start gaining the advantages of both sole proprietorship and a limited liability company. We'll come to that in a short while. But here, again, separate PINs from owners, taxes are filed separately from the owners. Okay, share of profit or losses for the LLP is taxed under the partner's PIN, right? So there we are. You also could be a limited liability company. This is what we know a lot as company limited. It has directors and shareholders. The liability is limited. Again, the PIN is separate. Just like the limited liability partnership, the organization and the individual have separate PIN numbers, and therefore you file your returns based on the separate PIN numbers. Others, just for the information, of this meeting, in our research, probably it's unlikely that a pharmaceutical entity is running as a trust or a community-based organization, but either way, we've put that information there just for completeness of our presentation. So ladies and gentlemen, that is what we've summarized for you about the impact of the Finance Act. Let's await and see how it is going to turn out from the judicial process. But as it is, that is what we take as the main things there. So that is about halfway of what we've prepared for you, because now we go into the last two topics. And this should be very, very interesting. Us in this webinar run businesses. What should we do to comply? And I think this would be of great interest, having laid that background there. At this point, Calvin, you'll probably assist me. I would request as much as possible for people to put in their questions as much as possible. Our team with Agnes and Alice are sifting through the chat section to see that we are answering, or at least we're getting to see what you want to know beyond what we have prepared. I think we'll be looking at that at the end of the presentation.
Put on their questions.
I'm sorry, go ahead, Calvin.
Thank you. That's well noted, and we are encouraging them to put down their questions on the chat box, but you can just continue. Thank you.
Absolutely, absolutely. So as a business, what should you be thinking about? We started with this slide and put out there, what are the common questions for a pharmaceutical practitioners? We sat in your seats and asked ourselves, if I was running a pharmaceutical practice today, what should I be thinking about? But as I said at the beginning of this webinar, I am definitely not an expert in matters pharmaceutical, but you'd want to know, how do you run your business? Do you have a business system? Because it rises and falls on you having a business system. And by the way, business system is way more than IT system. An IT system is part of a business system, but your business system will encompass your IT, your people, your processes, your policies. All that entire way that you run your business is something you need to be thinking about. Are you maintaining records for your business? Taxes are driven by records. Documents, what you've put in your file, is what runs the entire tax agenda. As I share, I'll be sharing a slide later on how to deal with key areas of business. It rises and falls on the records that you have. Which taxes affect your business? A few slides earlier, we've gone through all those taxes to give you a background. Is your business system configured with the correct tax rates? A pharmaceutical practice is stock-based inventory. It is very efficient to run your practice through a system. You can either put your things on Excel, you can put them in accounting software, but the idea, because you're trading, you're buying and selling, it is basically trading. The best approach would be to get all those stock items, have them given the right VAT code, so that as you buy and you sell, then things are working automatically in the background, the VATs are computing correctly. Otherwise, it might be very cumbersome for you to do that. So it's important to make sure that your system is configured with the correct rates. Are you aware of the tax exemptions that apply in your business. Tax exemptions are there, reliefs are there, and there are legal ways of you reducing your tax, but it's important to be aware of what they are. Do you have employees in your business? Why is this important? It traces other employment taxes, PAY being one of them, and many other things around controls in your organization, who's doing what. So as you're running your pharmaceutical practice, this might be a common question that is running through your mind. Have you rented or leased? Or do you do your own business in your own premises? Maybe it's your building, so you don't pay anybody rent, or it's a family property. Those are things that you need to be thinking about where taxes are concerned, because there are tax implications of all these things, right? Do you co-share space in your business premises? Maybe you have a pharmaceutical practice, there you have quite a large space, so you sublet part of your premises to someone else. Those things have tax implications. Most pharmacies we've seen, they run other businesses beyond the tax. The pharmacy business probably might have an M-Pesa shop, either yours, or you have sublet. Again, that part has an implication on your taxes, because some of them would be different types of taxes. One might be business income, one might be rental income. Again, it depends, or it has implications on how this works. Now, have you had any interactions with KRA? I see we are about 1,000 participants in this call. Each of us have very different circumstances, but maybe you're thinking, I know I've either gotten a query or a verification or an assessment or an audit. We're going to try give you a roadmap on how that would work. These are the common questions we thought would be in the mind of our pharmaceutical practice. But again, we are happy to hear anything you might have left out. Again, we'll be looking out on the chat to see what we need to be working with. We'll make an attempt in the next few slides to try answer all these questions as we move on. Now then, how do you engage with KRA as a business? Now, the first thing, when you get a tax audit, what is a tax audit? It's an examination of your tax returns by KRA to verify that your income and your deductions are accurate. We are in the realm of self-assessment. What that means, KRA tell you, you do your figures as you find best and make the decisions as you find best, determine the tax you need to pay as you find best, record it in iTax as you find best, write the check to KRA and pay as you find best. No one comes to do that for you. KRA does not do that for you. Now, all of us, like on 30th of June, we are all running to make sure you've done that. Now, KRA can stand back and start studying what we submitted. And in their judgment, they might come and ask you questions if they deem so. That is what is called a tax audit, right? How does it happen? They will send you a formal letter communicating the intention to conduct the audit. It's not a surprise. It's not an ambush. You have the right to get a letter that tells you, we want to come and we intend to conduct an audit. The letter will give you a notice period for you to prepare for the audit. Now, in the next few slides, I'll be showing you, if you feel the time that you've been allocated is not enough, you have the right to request KRA to give you more time to prepare. There's nothing wrong with it. It's meant to be, especially if you've done your taxes well, it shouldn't be a problem. The problem arises in case you know your taxes are not in place. That's when you might start getting worried, and that's what we bring this other slide. Do not panic. Whatever you do not panic. Okay? Now, I'm not here to defend anyone who's not compliant with the taxes. But even if you're not compliant with the taxes, there is a way out. And we'll be sharing that here. but we've seen most clients start by panicking. And at that point, you're vulnerable. At that point, you probably might lose any advantages you might have had. And what's an audit? Maybe you got 80% correct. It is 20 that is not correct. So people will be focusing probably on a smaller area, but the first thing we say, do not panic. Now check your KRA registered email often and ensure you don't miss a KRA message. When you registered in iTax, you must have given an email there. Please make sure you give an email that you are actively monitoring, because it means that that is the way they KRA communicate to you. A letter might have come 15 days ago. You probably have never looked at that email, but remember, it is deemed to be communication that has reached you. Because when you registered for iTax, it is you who gave that email address. So we advise our clients, make sure you are seeing what KRA is putting across, because they communicate a lot on the email that's on their record. When you get that letter, when you get that assessment, when you get that question, when you get whatever it is, try to understand where KRA are coming from. What are they exactly asking? All right? Feel free to call them. Feel free to meet them, to do an email, to do a letter, to clarify what exactly are they looking for? Where are they coming from? Is it a forensic audit? Is it a normal audit? What is it? If you feel you don't understand, make sure you ask, because depending on what they're asking, focus on answering that. Okay? As I said, if you need more time, do not hesitate to request for more time, either to commence the audit, because they might send a letter and say, we intend to come in the next 2 weeks. If you're not ready in the 2 weeks, request for time, say, I might need a little bit more time, maybe 2 more weeks. Of course, it needs to be reasonable. Then you need a little bit more time. When they come to your site, they'll come and ask you for some information. Now, if they ask you for something that you need more time to provide, please request for more time. Again, reasonably. There are some things that as a business you're expected to have. If someone asks you, give me your bank statement, that is information. Even if you don't have, you can ask immediately. So there has to be some reasonableness in what you're putting across. Provide the response. So they've asked you this, provide the response and be very open. Okay, make sure that you're in communication with KRA, keep the communications lines open. You might agree. So they come in and tell you, from our assessment and from what you've done, we believe you need to pay 120,000 shillings. These are the penalties, these are the interests. Of course, you and your accountant need to look. There's a place you get and you say, the best thing to do here, just to agree and pay. But even that payment, you can request for a payment plan. If that happens, things are going well, you have a chance to comply moving forward. What then if you don't agree? They might tell you it's 120,000 shillings and you're convinced it is not 120,000 shillings. So what happens? There is a process in which you need to resolve that dispute with KRA. There is a laid down procedure. The next slide will be telling you this procedure, but follow that procedure and disagree with them. The last point is very important. If you need assistance, please hire a professional, because the matter may not be as big as you imagine. The route or the path that you need to take may be very clear to a professional, but might be a bit hazy for you. So do not hesitate hiring a reasonably priced professional, knowledgeable, who can help you with the process. At the end of the day, you want to go back to your pharmaceutical practice. You don't want to be stuck with back and forth and figures. You want to move on. And they came. So answer the questions and move on. If there's a penalty, interest, whatever you decide, sometimes you count your losses and move on. But some decisions like those are best done with the assistance of a professional. Then let's go to resolving the disputes. I've already said there's a laid down procedure. How do you do that? You start by raising the objection with KRA. If you receive your assessment, they say from our audit, you should be paying 120,000, whatever it is, you raise the objection, okay? Now, they'll go to KRA, they will look at the objection, and they will give you a decision. So it was 120, you've objected, you feel it should be 60. You probably even feel it should be nil. So if you agree, the objection that they bring and the decision they say, okay, fine, we say we agree with you, we were wrong, you are right, again, that closes the matter. Of course, your objection gets the light of day. If you don't agree, then you go to the tax appeal tribunal, make an application. How does that work? The first level, go to alternative dispute resolution. Don't rush to court. That's just basic professional advice. But of course, you have the right, every right to go to court if you wish, that's okay. But we found that this process yields better results. So you go to them and say, let us negotiate. It is legal, it is an alternative dispute resolution process. The good thing is that you have room to get a favorable decision. Remember, KRA are human beings. They are our brothers and sisters and cousins. They are human beings. So when people get to talk and to negotiate within the law, and I'm saying strongly within the law, no favors, you're actually talking, there's room for you to get a favorable decision in whatever sense. If you decide to go to the tax appeals tribunal direction, it now moves from a negotiation into a win-lose approach. You're on different sides of the table. You win, I lose. You win, I lose. I win, you lose. So that it becomes matters of interpretation of the law. What does the law exactly say? So KRA bring their laws, you as the taxpayer bring up your laws, and you are arguing on matters on interpretation of law. Again, after that, you can appeal whatever decision that comes from the tax appeal tribunal. You can appeal to the High Court, to appeal that decision, and that basically is the highest office that you can go to. Whatever decision that comes from there is probably binding on the matter. So that is what to do, ladies and gentlemen. There is a laid-down procedure. It is part of a business process, but I'll go back to say, and I have a slide to show you that. How do you avoid all this? Or how do you reduce the impact of all this? Okay? Let's come then to compliance. I'm a business. I've been doing this. I'm either doing it right, been doing it wrong. What do I do from here? So the first step is to do what we call a tax health check. A tax health check, I believe you're medics. There's a part of you that you'd understand when someone goes for a body checkup. We want to see what is wrong with your body or with your whatever is ailing you. So equally, a business can do a tax health check. Professionals come to organization and they check. Let us just go through what could be wrong. This is now between you and the professional you've hired. It's not KRA, you're just taking a tax health check. You want to know how deep is the problem, if at all. The outcome of a tax health check is you might find there are things you've not done right. In that case, you do something called a self-declaration. You wake up, go to KRA, tell them, of course, you're doing a letter, everything is formal. I'm just simplifying it for the purpose of this webinar, but there's a whole process to it. Your professional should be able to guide you. But in effect, you're telling KRA, I have done my own tax health check, and I think there are problems here and there. After that, you do a voluntary declaration. When you walk up to KRA, as positive as you are, you stand the advantages of getting waivers and tax amnesty. But remember, in the earlier slides with the Finance Act, there's a very big opportunity, ladies and gentlemen, that has come up. The process of getting your penalties and interest waived in KRA is extremely difficult. It is so difficult. It is lengthy. It is cumbersome. It is draining. So here, because there's an advantage, if that law goes through the judicial process and we know it is the law of the land, there's an opportunity for you to go and clean up your books, clean up your everything, walk up to KRA, you just pay the principal tax. Then the interest and penalties and all the sins of the past, as long as they are not fraud, they are not money laundering, they are not criminal, then they are forgiven. That's a big thing. In the absence of an amnesty like we have today, you have to go through the application process, which I'm saying it is usually not a very easy thing. Here it is. The Finance Act provides for 100% waiver of penalties and interest for taxpayers who had paid all the principal taxes by December last year. If you still want to enjoy that amnesty, you can still pay that principal tax by June 2024 and still apply for this amnesty. I'm a finance person. For me, this is a big opportunity for this country. Remember, we are differentiating finance and politics. From a finance perspective, this is a very wonderful opportunity that you can do to comply. We have a window where people can get it right. Then lastly, then implement a system of compliance moving forward. You don't want to go back to the sins of the past. You don't want to miss out the areas that you've been falling in place. Now you keep falling again. There's a way you can set up your business. Remember, we started by saying, how do you run your business? What systems do you have in place? And by the way, it doesn't have to be expensive. No, but it needs to be well thought out by a professional who can help you then put systems of compliance moving forward. Should something go wrong, it's a genuine mistake. It is not an inherent problem of negligence or a place where you don't have a system running for you. Just a few tax nuggets as I bring my presentation to the end. There is something called tax avoidance versus tax evasion. Tax avoidance is legal. Tax evasion is illegal. That is the key difference. There are ways which you can reduce your tax legally. And ladies and gentlemen, take full advantage of that because it is legal. However, tax evasion is where you actually know what you should do, and for whatever reason, you refuse to do it. That is illegal. So we give you opportunities of doing tax avoidance any day. This terminology called tax planning is very important. Tax planning basically is where you get a professional to help you get full advantage of tax avoidance opportunities. So that moving forward, you have a way of saying, I run my business in a certain way so that I can legally reduce the taxes that I pay. And of course, taxes is an expense like any other. It means more money in your pocket and more wealth for you. Remember, we talked about making money, growing money, protecting money. Tax planning is part of protecting your money. Reliefs are opportunities for you to get something back from the taxman. That's legal. A very simple example is a personal relief. Every resident taxpayer, or no, actually every taxpayer is entitled to a tax relief. That means for every tax you pay, you get back some taxes. As long as you're not earning more than 24,000 shillings per month, then you're paying zero tax. Now, those are things that are legal. There are other reliefs, even going to personal for your personal lives. There's insurance relief, there is mortgage relief. All these things are there, but it is upon you to go for them. KRA will not tell you you missed out something. If you're doing an insurance and you're supposed to be getting some reliefs, it is you to go for those reliefs. Invest in the right personnel. It might save you in the long run because you're getting someone who knows what should be happening. Trying to solve a tax problem is a lot difficult. You better avoid it in the first place. Pay a little bit more, get the right people to help you avoid these pitfalls. As I said, you're in the business of pharmacy. you want to grow your pharmacy practice, you want to advance, so you need the right support there. Depending on your area of influence, your sphere of influence, we always tell our clients, please hold the government accountable through the laid down processes. It's important for us to see, in fact, we also do personal financial management. And if you look at someone's expense, the biggest expense in most times is either taxes or loans. So it is the single biggest expense that you pay. So it's important for you to actually be aware that you can always hold the government accountable. Should we really care about government and taxes? We are convinced there's every point to care about government and taxes. So ladies and gentlemen, that concludes our presentation today. Our greatest gratitude and appreciation for the opportunity to have spoken to you today on the subject of taxes. We look out on the chat to see if there's anything else we need to handle, but we are open for questions and answers. Back to you, Calvins.
Wow, that was wonderful. And allow me just to applaud you, Mr. Kennon. What a delivery. What the simplicity of how you've put it. This is awesome. And I've learned something new. KRA, they are friendly. We can approach them, and there are laid out procedure on how we can approach them and we can handle these things. And one thing which I've learned, I should not run to court. If I'm in a fix, I go to KRA, there are laid out procedures, and they will sort me out, and I can get the services of professionals like you who can help me. But above all, compliance is key. I know I'll just talk to you just later on how to navigate this tax avoidance so that I don't be in the fix. But allow me to welcome my co-moderator, whom we are going to take the questions that we have. So Cletus, you can take the first question, if you're there.
Good evening, Calvin. Can just confirm if you can hear me?
Thank you, Mr. Cletus. You are loud and clear.
All right, Wanambai, we have lots of questions here, and members and the participants here have overwhelmingly listened to you and brought us in several questions. We shall begin with Edwin Wahome, who is asking, TOT is payable monthly or annually?
I think we can take that quickly. TOT is payable monthly. Alice and Agnes, you can actually confirm that to us.
Good evening, everybody. Thank you so much for attending this training today. I hope you've all learned a lot. So to the question that has been asked, turnover tax is payable each month. And if you happen to miss out on paying a month, then you'll be liable to a penalty of 1,000 shillings every month that you fail to file your return. And that, I must say, is the late filing penalty. There'll be an additional penalty if, for example, you are supposed to pay 100,000 in this month and you skip it and pay the next month, then the penalty on the late filed tax will be 5%. Thank you.
All right, thank you so much for the elaborate answer. Susan Kariuki is concerned. Please kindly clarify, the tax is being calculated from the profits or from the total sales? To you.
So Susan, for turnover tax, the tax is calculated on the total sales, your gross revenue, everything that you earn from making sales. But for corporation tax, and that applies for a limited company, the tax, which is now at 30%, will apply on the net profit, which is your profit less the expenses that you incurred when running your business.
Thank you so much. get the concerns of Vincent Lidonde. Vincent is saying he has defaulted in paying his turnover tax for 5 months. Is he liable to a waiver?
So yeah, currently with the passing of the Finance Act, you're still liable for a waiver right now, but if you exceed next year, June, like from July 2024, if you go beyond that time, the Finance Act does not allow for KRA to grant waivers. There's the amnesty that Kenon had highlighted too, that states that if you pay your principal tax, then you'll be liable to, or rather you will get a 100% waiver on your penalty and interest. In this case, your penalty is coming from late filing, meaning there is no principal tax to pay. So for that, my comment would be, we'll leave it out to see how the KRA will set out the system of granting taxpayers the amnesty, the 100% waiver, whether it will also incorporate late filing penalties or whether it will only focus on penalty and interest that arise as a result of failing to pay tax. From 1st September this year, it's when we expect that the KRA will have upgraded their iTax system. And we can keep in touch and keep seeing how that will roll out. And if it's available, we can even assist you in the application of that waiver for the penalty and interest.
Great, quite informative. I know the Rosemary's Gogo's question might have been addressed by Kenon, but just for more clarity, Rosemary is asking, kindly explain more about the types of taxes and which category of tax does a limited company fall in? To you.
So Rosemary, for a limited company, the major tax that it's required to pay is corporation tax at the rate of 30%. And this 30% is on the net profit, as I've said, meaning you'll pick your revenue less the expenses that you will incur while deriving, or rather when running your business, and then the net profit, you will pay tax on it at 30%. It's also good to note that a company, a limited company, could also have hired employees. And in such a case, it is the responsibility of the company to remit PAYE that it has paid to, that it has deducted when paying its employees to the KRA. And other taxes such as withholding tax, which now arises if the company is paying for professional and management services. Maybe they're paying their lawyer, maybe you're paying your auditor, then you will have to pay withholding tax. So pretty much a limited company would be liable to pay many of these taxes, even including VAT. In an instance whereby your business has a gross revenue over a year of 5 million, it means you will be required to actually register and account for VAT as a company as you continue to conduct your business.
Thank you so much for that great answer. Esther Nduwaru is asking, my tax obligation reads for resident. It's the PIN I use for business. How do I go filing?
Okay, Esther, thank you for your question. So the KRA allows an individual to earn several sources of income. You could, it allows you to earn income from your employer, income from your business, income from rental, property, income from interest from a bank. So what happens when you're filing your return, the KRA workbook allows you to, it actually asks you several questions. It will ask you, do you have any other business other than employment? And in such instances, you're supposed to check and say yes for each and every situation that applies to you. So once you say that you have any other business besides employment, then the KRA workbook opens up several worksheets that allow you to declare the details of your business. It allows you to declare your revenue, your expenses, and then it captures the net profit and calculates the taxes that you're supposed to pay. And it also will capture the employment income that maybe you've also been earning from an employer in a certain year. So you will do all this under your personal PIN, the one that's A00 and all that. There are several people who prefer maybe to use a different name for their business. For example, your name could be Esther, but then your business is Esther and Daughters Limited. So you could still use a different name, which we call a business name, to run your business. And when you come to filing to KRA, you will use your personal PIN to account for the income that you have gained from the sole proprietorship or from the business name that you have been using in conducting your business. I hope that's clear, Esther.
Quite very clear. Kindly address Walter Babu, and Babu has asked a question that directly touches on the pharmacy professional. As pharmacy professionals, I would wish to paraphrase his question so that you understand. As pharmacy professionals, we have practice licenses that we use. We have licenses that we use to superintend a hospital pharmacy or a community pharmacy. At times, you are paid a license fee for this particular superintending that license. So Walter Babu is asking, when you earn a license fee from such superintendents, where do we classify it in terms of taxation, especially when you are receiving a lump sum? Back to you.
Okay. So what I understand is that this is income you're earning because of sharing your license with another party. Is that right?
Very, very correct.
Okay, so above in this case, I'm assuming probably you have another income, could be now maybe income from your pharmacy or something, and then there's also that other income you get from offering your license to be used by a third party. In this case, when you're going to declare your income so that you can now account for your taxes, you can record it as other income. You can opt to give more details of it or but it's actually easier to just say other income and maybe a hyphen license or something. Like, let it be clear that it still falls within your industry, because sometimes the KRA would now start wondering, this other income that you've declared in your return, would it maybe be relating to rent? And now they'd want to know, why are you now then declaring your rent here? Have you paid the 7.5 or 10% on it in the previous years on it? So it's better when you're declaring your income and filing your return to give a bit of more description, not too much, but just something that answers a question that may pop up at the head of a KRA officer that may be reviewing the taxes that you've declared when filing your return. But yes, you declare it as other income and it will be added together with your mainstream income and taxed under the normal tax rate that we have. Either whether I'm assuming in this case you're doing it as an individual, because then the license is being offered from being in your name. So then you'll declare your mainstream income plus this other income from giving out your license, and then the same will now be subjected to the tax bands that we have, and you'll pay tax on that income as a whole. So the date in which you're supposed to pay income for it, and especially now that you're saying as a lump sum, I'm assuming maybe it's the license has been used for a number of months or for a certain period, and then you're paid a certain amount at the end of a certain period. So if you are an individual, the year in which you receive this income, you're supposed to declare it before the 30th day of the next year, for example. the returns that we are filing last month for June were for income that we received from January to December 2022. So you're supposed to declare it when filing the return for the year when you earned it. Thanks.
Thank you so much. Quite elaborate. John Jenga is one of our leaders, and John Jenga is concerned. It's a concern. I don't know whether you'll have a comment on it, that KRA should be friendly to businesses so as to remove mentality of being feared. That is a comment from John Jenga.
Yeah, I'd like to comment on it. Thank you, John, for your comment. Actually, I'd like to highlight that the current KRA we have now has improved quite a bit. You cannot compare the professionalism level that was there in the KRA 5 years ago with what we have now. The KRA is continuously improving in how they communicate to you, how they address you, even if you've not paid taxes, how they approach this whole thing. And I believe we're actually moving towards an even better era, whereby it will not be something that, it will not be an area that inspires fear or inspires unfriendliness. So it's a kudos to the KRA. Actually, these days you would write KRA a message and they reply, something that has been not easily done in the past years. So John, yes, we agree we have that challenge, but I believe we are moving, as a nation, we are moving towards a better governance and tax collection scenario between the revenue authorities and the taxpayers. Thank you.
Thank you so much. John was
sorry.
John
Kindly allow me to add on to that answer, sir.
Yes, Kenon.
I thought to interject on that and sorry, don't put the cart before the horse. That will work if we comply, because it is a two-edged sword. Okay, so I do agree with the sentiments that were brought up and the comment, and even I'm okay with the answer that has been given by Agnes, but I thought to shed light on the other side, it gives you a lot more confidence when you comply. Thank you.
Thank you for qualifying that particular one. So John, you now understand when you comply, then they are okay. Rosemary Gogo has asked a different question again. What are the charges for hiring a profession?
So Rosemary,
let me take that one. Because it's very wide. So Rosemary, it depends on the scope. Scope means what are you hiring this professional to do for you? Secondly, it will depend actually on the caliber. If you look at the environment, there are people who charge a lot higher for their services. So it depends on the caliber of the profession you go for. Without diluting the quality of service that you get, it can only be made on case by case. I can only talk about our organization because I'm aware our prices are very fair, but this is not the forum probably to bring up the discussion. But it depends on what you're looking for, and it depends on the caliber of the organization that you go for. Unless, Agnes, you can go ahead and add if there's anything else I've left out on that one.
Actually, Kenon, you preempted what I was about to say. For professional fees and consultancy fees, it pretty much depends on the tax rates, or rather the fees rates that a specific firm or a specific individual has decided to charge based on what they believe, what value they believe they're adding to your service. And secondly, on the task, or rather on the service that you require to be offered. For example, assuming you have a KRA assessment of around 1 million and you're looking for a professional to assist you in resolving it. So you'd expect that a person with such a case and another one with a case of 100,000 would be charged differently. So it really is based on a case to case, depending on what service is being sought, what problem is being solved, and also the rates that the different professionals offer in the market.
Thank you you so much, team. Kindly address Agnes, kindly address Gabriel Wainaina, who is employed and he files his taxes against his P94 form, and he's asking, can he use the same PIN number to open a business? Agnes?
Yes, Gabriel, you can use your same PIN number to open a business. In case your business will have a different name from your name, Gabriel, then in that case, it will be called a business name, whereby you'll be the same individual running your business, but you'll use your very same PIN to declare the income and to account for the taxes on the profits that you earn. So I had mentioned earlier that the KRA allows you to actually declare your employment income, your business income, your rental income in one workbook. It's possible. So what happens when you're filing your return? There are several questions that you'll be asked in the initial pages. One of them will be, do you have any other business other than employment income and such things? So when you say yes, it gives you an option to then declare your profits, your expenses, and the net profit and the employment income will be lumped up together in that workbook, and the taxes will be applied on it.
Thank you, Agnes, for such elaborate answer. Agnes, Lydia Omondi has a great concern here. Lydia says she was sent a message by KRA over issues of a business that she had registered but never got to start the business. She replied to KRA explaining why the business did not take off, but till date, she has never received any feedback. Now she is asking, how does she know that she is not in trouble?
Okay. So in this scenario, I'm assuming that the communication with the KRA was through email. So they asked you a question through email and you responded on the same. And even if assuming it was a letter that they sent, I'm assuming you responded to the letter and delivered it to the KRA premises and they stamped it for you. So in such a scenario, sometimes you find if KRA queries a taxpayer on an issue and you respond clearly or you respond in such a way that from the KRA side, there might not be any tax that they are probably going to recover from you. There are many instances where they drop off that communication. They will not tell you this case is closed or anything, but you will not hear again from them. So to ensure that you're covered, always ensure that you have that email communication showing the question they asked and how you responded. If it's in case of KRA sending a letter to you, always ensure you respond back in writing and you deliver your letter to the KRA offices and ensure that they stamp showing that they have received a letter on the day, which you take it there. And then keep that record very safely. In case that matter comes up again, that is the support you will use. In case they ever query you about that issue again, those are the documents, the email or the letter that you will use to explain your situation, to explain that this matter came up and I responded to your offices this way. So it's for you to tell me what do you want now to move with this from this point. But now having that letter and having that email keeps you safe.
All right, Agnes, that is quite elaborate. Let us prepare the next few minutes to address the following concerns before we can close. Eunice Karori is asking, after filing returns and you find that KRA owes some cash, are they supposed to refund you through the account they ask you for? I know Kenon had addressed this, but kindly just provide more clarity for Eunice Karori. Agnes?
Okay, Eunice, so what the KRA has provided for is in a case, so, okay, let me talk about this in two scenarios. Preceding June 30th, that is before the Finance Act was signed, the law was such that if an individual or a company happened to overpay taxes, and this happened a lot for companies because, as Kenon had explained, you're supposed to pay installment, like for corporation tax, you're supposed to pay it with using installment taxes, and you're supposed to estimate the taxes you paid last year, and then you multiply by 110% and pay the same for this year. So there are instances where companies and or taxpayers find themselves to have overpaid tax. Maybe you estimated at 110, but then your business didn't do as well. Meaning when you go to file your return, it will be in a refund position. Another scenario where the refund position comes in is withholding taxes, whereby you offered services, tax was withheld from you, the 5% that Kenon was explaining, and remitted to KRA. But by the time you go to file your return, you actually discover you had so many expenses, you're actually in a loss position. That means you've already paid tax to KRA through the withholding taxes that were held from you, yet you are not supposed to pay taxes within a particular year. So what the KRA does is that they have been asking taxpayers, or rather what the law requires is that a taxpayer is supposed to apply for a refund with KRA. The iTax system allows for refund application. There's a section whereby you actually click on the refunds, then you choose the options that they give you, and the refunds that you have automatically pop up on the system, meaning the KRA system already knows how much they owe you. You're then supposed to initiate the application, and then it goes through a review by the KRA, and the review would actually involve an audit, whereby the KRA would come and verify that the income you declared was all the income you got. The expenses you claimed were legitimate expenses that are allowed for claiming within the law. And once they are satisfied that then this refund is supposed to be refunded to you, they would then initiate the refund process, which now you share a new set of bank statements or details where you want the money to be sent. I know when you're filing the return and you find yourself in a tax credit position, the system automatically asks you to declare your bank account or or maybe your M-Pesa number, depending on what you choose. So yes, there is that, but before the KRA can send you a refund, and especially for companies that involve huge amounts of money, they would usually come for an audit for it. For individuals, most of the assumption is that the refund could be, maybe you didn't work for the full period of the year, maybe you worked for a number of months within a certain year. There's the annualization of the tax rate bands that makes taxpayers appear to be in a tax credit position. For that, KRA does not refund. But for any other refund, maybe your employer overpaid your taxes, well, they're supposed to refund, but very few scenarios where they refund these amounts. So it's not an automatic process. And ideally, if the amount is significant, it involves a KRA audit before the refund can be issued. So with the passing of the Finance Act, now from July proceeding, the KRA will actually allows you to utilize any overpayments with taxes in future. For example, assuming in year 2022, my company had a tax credit of 100,000. Then in year 2023, my taxes will be 300,000. The law now allows me to offset that 100,000. Now meaning the taxes that I'll pay in 2023 will be 200,000. And now this will happen without the audit. So it's a good move for businesses.
Thank you so much, Agnes. From the feedback I'm receiving, your answers are very elaborate, and the participants are liking the elaborate answers. Now, Agnes, we have a question from one Sarah Kisilu. She owns a pharmacy business, and this year she filed 0 returns. Now she asks, is there any issue with that with KRA? Agnes?
Yeah, yes, Sarah, there is an issue because you see, when the KRA tell you to file your return and you file a nil, you're actually telling them that you did not earn any income for that particular year. But in the real sense, you earned income from your pharmaceutical business. So that actually would pass as misinformation to the KRA. And you'll find there are times that the KRA can ask you for your bank statements or the bank statements. Actually, by then, when KRA has your KRA PIN, they're able to know what bank statements you have or what bank accounts you have. So they'll be able to know that you have bank accounts maybe in ABSA, in Standard Chartered. And they're actually also able to know what bank statements a company has. Assuming I own a company and I'm listed as a director there, they can ask for bank statements for a company where I'm listed as a director. So as Canon has emphasized, we are really encouraging Kenyans and our taxpayers to pay their taxes, because it's only that way that you will be comfortable running your business. You will not be wondering how will KRA one day send me an email, will KRA be able to know that I didn't declare the correct amount of income that I earned in a particular year. But if you actually ensure that you're compliant and you declare your income as it should be, then it means you'll rid yourself of any such worries. But yes, you are supposed to declare the income that you earned.
Thank you so much, Agnes. Kindly answer Joseph Nderitu, who is asking, what happens when my employer has not been remitting my payee tax, yet have been filing, but my tax liability on the ledger is still on the negative? Agnes?
So Joseph, maybe the first question would be, have you filed your return? Did you file it and find out that now you appeared as if you owed KRA some money? So I have seen a few instances where there are some employers who do not, yes, they deduct the PAYE from you when they are paying you your salary, but then they do not go ahead to submit it to the KRA. So maybe there are two ways of approaching this matter. The first one would be, if possible, if you're in a position, you could notify your employer or the HR, the people who share with you your P9 form. You could notify them that when you went to file your return, you noted that PAYE had not been submitted to your ledger. And the second thing would be, you can file your return, and for any questions that the KRA asks, then you would need to support your situation with your P9 form and your bank statements. Because in your bank statements, it will be showing that the salary that was remitted to your bank is net, less the PAYE. And in such a situation, it's then upon KRA to pick up the case with your employer. Always remember, the burden, or rather the responsibility of accounting for PAYE is a responsibility on the employer and not so much on an employee. But then now it means there are some other problems you'll encounter. Assuming I just take my P9 and file my return as is, yet PAYE has not been remitted into my account, it means that I'll first appear as if I owe KRA, and I would not be able to access documents such as TCC, a tax compliance certificate. And these are documents that you may require for even personal businesses, not just for employment purposes. So I think the most reasonable one would be to see if it's a matter that can be solved between you and your employer, because your employer actually owes you a professional duty to account for the taxes in the land that are required of him in the country where he's running his business and where he has hired you.
Thank you so much. Now let's get into mathematics here. Kelvin Mwangi us into a small mathematics. Number one, He says, let's say my business earns me a monthly 500,000, but my pharmaceutical has no taxed medication, e.g. supplement. Should I still file tax? So what he means here, number one, is that in the business of pharmacy, supplements are taxed. So if he says that if he does not sell supplements that are not taxed, is he still liable to filing a tax? Then secondly, do we pay the tax given by the supplier when we buy goods, or it's the monthly sales? So those are two great important questions from Kelvin Mwangi. Agnes.
Okay, so maybe just to break this down, the first 500,000 is income from?
It's income from the sales of, okay, he means that there are goods that are taxed and there are goods that are not taxed.
Yes.
So he's saying if he sold the goods that are not taxed, how does he go about filing that return?
Maybe my question is, when he says he has sold goods that are not taxed, are we talking about VAT? Because I think we are talking about VAT.
Yes, I think that, yes, that is it.
Okay, then that's fine then. Yeah, and especially this is very common in the medical field because we find there are a list of medications that are exempt from VAT just to promote health and well-being of Kenyans. So the first thing I'll answer this into using under two taxes. I'll answer the first one under corporation income tax. So corporation income tax generally will pick all the revenue that you have earned, less all the expenses you incurred. For example, the amount of money you used to purchase these medicines, the rent where you are, any employees you're paying. So under corporate income tax, you will pay tax on both the 500 plus the income from the supplements, because this is a tax that is checking upon all the sales you have made. Just directly all the sales you have made less the expenses you have incurred. So for VAT purposes, for medicaments or for medications that are exempt from VAT, you will not be required to pay VAT or account VAT on this. So when you're selling these supplements to the people that come to purchase from your shop, it means you'll also sell to them without VAT, and you'll also not be required to account for VAT on them. And this brings up a very important topic on VAT that is called apportionment of VAT. So where you find yourself selling goods that are subject to VAT, mixed together with goods that do not attract VAT, there's a law that requires that you apportion the input VAT that you claim in a certain month. But then that's a topic that can be looked on a case-by-case basis because it is very specific to the ratios in which you're selling VATable versus exempt or zero-rated supplies.
Agnes, we must accept that this is a topic that has attracted overwhelming questions, and I'm on the second last question. That is from Cynthia Okaro, and it's somehow related to the question that you've just answered. Now she says, how do you file returns in a business that began 1 year ago and there are no profits yet? And please, may you comment again on the type of tax a community pharmacy, that is a chemist, should use, and how is the process? So those are three questions in one question.
Okay. So maybe we can start with the first question, yeah?
Yes.
Maybe you can
How-
break for me down
Yes,
one by
yes.
one. Yes.
The first question, how do you file returns in a business that began 1 year ago and there are no profits yet?
Actually, I'd highly recommend, if you are starting up your business, please ensure to keep the records of your business. For example, the rent you're paying at the premises where you are, the purchases you're making for the medicines, and any other expenses, transport that you incur. Because sometimes you find that, especially when you're starting a business, you will incur very many expenses. And the point where you break even would be maybe years after the first year, maybe the second or the third year. So what happens if you started your business last year and you've not made any profits, those losses, or rather the expenses that you have incurred to date, you are allowed to carry them forward to your businesses in the next years. And now what these losses do, they reduce the tax that you will pay in future. For example, assuming in the year 2022, I started my business and I had so many expenses. I had expenses of 500,000 and I didn't make any profit, or rather I didn't make any much profit in that year. Maybe I made a profit of 100,000, meaning there is an excess of expenses of around 400,000 that I'm left with in that year. That 400,000 will actually be carried forward as a loss, which I can offset in my business the next year. Meaning if I make profits of 200,000 in the next year, I will deduct the 400,000 losses that I brought forward, and I'll actually be left with 200,000 losses to still utilize in future. So it's very key to record the expenses that you incur, and especially when starting your business, so that you can offset these losses in future, and it buys you more time. Instead of paying taxes, you'll focus your money more on building your business. It's a tax planning method.
All right. So combine it with having the background that the pharmacy business has got some goods that attract VAT and there are some that do not attract VAT. So then Cynthia is still asking, please, may you comment again on which type of tax this pharmacy should file, and combine it with Beatrice Wanjugu's question that is asking pharmacy should be on TOT or annual tax. So those two questions.
Okay, so for the taxes that a pharmacy should file, remember there are different types of taxes that operate independently. For example, when we talk of accounting tax on your income tax, it's where you can pay your taxes under corporate income tax. This you'll pay if you're registered as a company, if you're registered as a partnership, if you're registered as a sole proprietor, you will pay your taxes under corporate income tax, the 30% rate on net profit. If you are registered under turnover tax, you'll still be paying tax on your income. And this is where now the rates change. Currently, the rate is 3% on your gross turnover. So for the turnover tax, it's an option you choose, but there are limitations. Currently, the limit is that your sales should be within 1 million to 25 million. If you do not fall within that bracket, it means you do not have an option to choose to pay tax on your income tax and a turnover tax. You do not have the option to pay tax at 3% of your gross revenue. You will then fall back to paying tax and a corporate income tax at the rate of 30% on net profit. So it really depends on, first, whether you qualify, whether your business falls within those brackets, and second, the choice that you make. Some people have chosen turnover tax because of it's easy, it's direct. You do not have to keep proof of your expenses, such as invoices and receipts and all those things. You just declare 3% on the gross. So it's a choice that you make depending on what suits you best. For VAT, the VAT law requires that if you're selling goods or products that attract VAT at the rate of 16%, which is currently the general rate, you're supposed to account for VAT each month. And you're going to account it by, let's say you sell goods of 100,000 that attract VAT. You will multiply that 100,000 by 16. So your total revenue as far as VAT is concerned will be 116,000. And then you will deduct any purchases that you made. And in this case, if you're selling goods that attract VAT, it means you bought them with VAT. Wherever you bought them, you are charged VAT. So you will claim the input tax, assuming you bought them at 80,000. You will claim the input VAT that they charged you that time. That is 80,000 times 16. And then now the difference of your sale and your purchases is what you're going to give to KRA. The net of your output less the input. If you're now dealing with exempt goods will not attract VAT. When you buy them, there'll be no VAT on them. And when you sell them, there'll be no VAT on them as well. Yes.
All right, Agnes, let's have this as the last question. And I think Kefa Manduku is speaking for most people. He says, of course, I know you had tackled this question before, but just for clarity, Kefa Manduku is saying, where should he start? Because in most instances, he has filed 0 returns for the longest time for his pharmacy. Would you help, Kefa?
So, Kefa, maybe I'll start by mentioning that you're actually allowed by the law to amend your returns, but only up to 5 years back. You cannot amend your returns past 5 years backwards. So right now we're in 2023. You can't amend returns for 2016 going backwards. So if you are to decide that you now want to come clean and be compliant in your taxes, there's an option of you amending your taxes from 2017 going forward, and then declaring the income that you earned. Then hopefully you are able to track the records of the income you had, the expenses you had, and paying any taxes that may result, and taking advantage of the tax amnesties that have been provided within the law. If that may prove too hard for you, you could start now going forward. But then I'd have to caution you that it does not mean that KRA cannot check into your history. You could, yes, start filing your return from year 2023 going forward, but there has to be a disclaimer. There are instances where KRA might poke into your past. Maybe they could ask you to bring your bank accounts, and then they see you had income way before 2023. And then now that would raise the question of how comes you are filing the returns and you did not comply. But then again, there's I don't know if it's over. There was the voluntary tax disclosure that allowed a taxpayer to declare all the tax they have never declared. I think it was ending, could be this year or next year. I can confirm that for you later on. Or maybe Kenon, if you're there, if you remember exactly when the voluntary disclosure was ending, but that allowed a taxpayer to actually come forward to KRA and say that I never filed my taxes since I started, and this is the tax that I should have paid. Again, it will depend on a self-declaration. You will be the one to assess yourself. You'll be the one to determine how much income did you earn in that past, what expenses were legitimately earned through that business, and now what was the net profit, and then the applicable taxes on it.
Thank you so much, Agnes and Kenon.
And maybe,
we must agree.
Yeah, maybe I can
Yes.
comment on one question that I saw in the chat. somebody had asked what was the difference between zero-rated and exempt supplies in relation to VAT. So for zero-rated supplies, it means that VAT is charged at the rate of 0%, and you are actually allowed by KRA to claim input VAT on, or to, how would I put it? Like if you're selling a good that has tax at the rate of 0%, you can claim input VAT on it. But if your good is exempt, you cannot be allowed to claim input VAT on it. That is the major difference between a zero-rated and an exempt good or product.
All right, Agnes and Kenon, we must appreciate the fact that this is a topic of great and high interest to pharmacy professionals. And going by the overwhelming questions that we have seen in the chat box, quite a lot of information fast is available. If you can, just before we end this webinar, if you flag out any question that you can be able to answer in the chat box, kindly just help our participants by addressing them in the chat box. Up to this point, I want to say thank you so much for the Q&A session. From the feedbacks I have got, the answers have come in very well and elaborative. I want to take it back to my co-moderator, Mr. Calvin. Back to you.
Thank you, Mr. Cletus, for the good work you've done. And thank you, Agnes and Mwalimu Biashara team for the good work. My attendees, my members have really benefited for this event, and I'm looking forward for more of the engagement. And anytime we call you to guide us on something, kindly avail yourself. Without much ado, allow me to welcome Mr. Kenon Mbai to give his final remarks, and also to use that opportunity to share some of the contact of where he's working at, his contact, and if I may be in need of your service, how I can reach out to you. So Mr. Kenon, welcome.
So thank you very much, Calvin. Thank you, my colleague Agnes, always counting on her. She's quite well versed in matters tax, a good member of our team. We also have Alice who joined in. Alice does matters around law, legal matters. So should any question come, would you be able to take that? So before I make my closing remarks, there's something that I wanted to clarify. The voluntary tax disclosure that Agnes has talked about was running from 1st January 2021 to 31st December 2023. So that then we leave all questions answered. And also to clarify the turnover tax, I think there's one point in my presentation, I used 25 million instead of 15 million, but the upper limit for the turnover tax is actually 15 million. Having said that, Mwalimu Biashara is a company that was established about 7 years ago. You will find us in our website, mwalimubiashara.com. We do quite a bit of work with corporates and also with individuals. We have two outfits, one that deals with matters corporate and one that deals with personal financial management. You'll find us there. In terms of a number you can reach us, I'll put it on the chat section there, is 0769 494 260. That is one option. I've also put another number, 0721 887 006. I have put them on the chat section there. If you wish to send us an email, that would be info@mwalimubiashara.com. That's just one word, Kiswahili word, you get us there. Finally, again, back to the Kenya Pharmacy Association. Asanteni sana for the opportunity to present this information and knowledge. We are always humbled. And as Calvin, as you said, should you call us both at an association level or personal level, we are available to speak to your members and help them on matters that help them make more money, grow their money, and protect their money. Asanteni sana, ladies and gentlemen. It was a great evening for us, Mwalimu Biashara side. Asanteni.
Thank you, Mr. Kennon. And